Mihir Vora is with us, Chief Investment Officer at Trust Mutual Fund. And we also have Rahul, Bajoria, Head of India and Asian Economic Research at Bank of America Global Research. Gentlemen, great to have both of you here. Thank you very much for joining us. Rahul, you're the first, I think, economist that we have on. And so let me start with you. I'll give you the first word. So it's a happy occasion. The deal's done. What does this do in terms of growth impulses, turns of sentiment? The stock market is a powerful indicator of it, and we are seeing what's happening there. But beyond that, on a durable basis, what does it do? And any nuance, any detail you'd still wait out for in that sense? Go on.
Sure. So I think, first of all, this particular announcement obviously takes away the months of uncertainty that, both the RBI and the government have been kind of experiencing as far as the growth outlook is concerned. Now, obviously, the one question mark, I have is whether that kind of derails or at least slows down the pace of reforms that we have seen in the last few months. But my sense is that, it could, basically leave India into a situation where, now we have access to large markets globally. From a trade perspective, we obviously have had a fair amount of policy easing, both on monetary and fiscal side. And with the kind of commodity price backdrop we have, we should see a meaningful improvement in the growth outlook. One of the reasons why we did not upgrade our GDP numbers in yesterday's note was we are waiting for some specific details about what kind of import commitments have we made, what kind of sectors have we opened up. Obviously, the fine print matters. But I think it's safe to say that, the sentiment improvement and that we see in asset prices this morning is going to be a pretty big fillip as far as the economy is concerned. And so from here on, we think that the momentum momentum on the economic side, which already was looking pretty okay, to be fair, in the last few months, we have seen the growth numbers holding up. That probably gets a further boost from a sentiment standpoint. And that, my sense is, could easily push growth rates above 7% in the upcoming fiscal year as well. Yeah,
there's a growth impulse as well in that sense. That other point, any specific details still awaited? Have you heard anything? I mean, and people, of course, we'll hear, I'm sure, from the minister here in charge and others as well. But any specifics you're still waiting out for?
So one of the key questions is when, President Trump in his Truth Social post had mentioned that India is going to lower its duties to 0%. I think we would want to see whether this is a all-encompassing reduction or, are there carve-outs. But I think overall, when we look at the effective tariff rates on India, our back-of-the-envelope calculations were from around 35%. It drops to around 12-13%, and, potentially even a bit lower given the changing mix of the exports, towards electronics, which is exempted. So I think net-net, you will see a meaningful improvement in the competitive landscape of Indian exports. So even if, there are, fine prints and specifics that we are missing, my sense is that the overarching message is that from relative to where we were, say, last week to where we are right now, there is a meaningful boost to competitiveness when you put both the EU deal and the US deal.
That's the export bit. But on the import bit, which you refer to fleetingly, you would expect there will be carve-outs, right? Obviously. I mean, things like agriculture and many other things, despite that post from President Trump.
So I would assume there would be certain carve-outs, but the absolute numbers, I think, have to hold. Right now, the question is, India already imports about $50 billion of goods from the US. So does that mean that we bump it up to $100 billion on a run rate basis, or is this $100 billion on average every year for the next 5 years? Over and above that, I think those are the specific details which are missing. But my sense is that it will be more of a substitution rather than an incremental increase. Remember, India's imports are also going to grow in the next 5 years, which in turn are going to basically place a fair amount of space for India's imports to rise. So I'm less worried about the specificity. I think we have to look at the positive headline impact here in the way policy is going to be framed. And so from that perspective, I think the first reaction is that this is going to be positive for growth. I think what we are basically debating is to what extent is it going to be positive.
So case for GDP upgrades out here in India. Thank you very much, Rahul, for joining in. Mihir Vora, Chief Investment Officer at Trust Mutual Fund, is also with us. Mihir, already 2.5% in the bag so far in the morning. Do you see with this announcement, markets can move up by, say, 10%? in the next, by the end of this year, or maybe in the next 6 to 9 months? And what are the big ideas now? Have you been buying this morning?
Good morning. Thanks for calling me on a good day. Yes, it is a big event, and this is one of the key triggers that was holding the market back, and now we have got it. I remember in our weekend show we had discussed 10 days ago about this is the big trigger, so that's happened. And I think yes, 10% is absolutely possible for the markets in due course. May not happen overnight, but the fact is that we are catching up versus the rest of the world in a big way, and we have to, because as we know, as we have seen last year, India was amongst the worst performing markets globally, both in terms of absolute numbers and including the currency. So we have a lot of catching up to do in the currency. We have a lot of catching up to do in the equity markets, and with the underperformance, as we have discussed, the absolute and relative valuations of the market, whether it's in large caps, mid caps, or small caps, have become reasonable. So we're starting off with a low base, very pessimistic sentiment, currency weak. And now with this deal, I think a lot of the FDI, FPI flows, etc., which we are waiting on the sidelines because of this geopolitical uncertainty, will come in. I think the key trigger that we were waiting for is this deal, because it is the key to FDI flows and FII flows, which I think will start coming in a big way now.
Right. Hi, Mihir. Good morning. Good to see you. And as they say, right, form is temporary, class is permanent. And hopefully it's our time to shine now after the underperformance we've seen the last 12 to around 15 months. That said, Mihir, what are the cash levels you're sitting on? And are you all deploying today? Have you all deployed some money in the last few days? Budget day as well. It seemed there was an over-exaggeration on the downside. And from there, we've seen a good 1,000-point move, actually. What's your allocation strategy as we speak?
So we're keeping normal levels of cash. We had a little higher level of cash, so we are deploying it over the last 2-3 days. And I think it's going to be more about stock picking, because while the markets are up 2.5%, you do see stocks which had been beaten down, and sectors which had been beaten down on the back of tariffs. They are starting to rebound, and those will create a lot more alpha than the broader market. So it's time to go back to sector and stock picking, and that's what we are trying to do now. The key is that the currency, I think in my view, has been a big factor. And if you see today, the rupee is appreciated by almost 1.2 rupees versus the dollar, and that's going to be the trigger where people now see the geopolitical risk and the currency risk out of the picture. And then if you adjust for that, then the absolute returns in India look very good. So I think we will keep deploying the money over the next few days.
Yeah, 100%. Mihir, a shorter conversation, but punchy and useful to get that quick input from you about where we are at now after this big deal. Congratulations, I can say, as you manage your portfolio, and it'll all be looking good, looking better, much better as compared to where we were yesterday and day before yesterday.